Hey there, everyone. Hope you had a great weekend. Just want to send across my weekly market update for the week of March 16th through March 20th. So let's just jump straight into it. So, big picture housing inventory and demand. So, normally, housing inventory begins its seasonal rise in the early part of March. It kind of climbs through the later part of July. Surprisingly, inventory did decline slightly last week. It dropped from 690,000 to roughly 686,000 nationally single family listings. So as you can see, we're still, slightly higher than we were in 2024 and 2025. So inventory is picking up and is kind of gaining year over year. Even with that small dip, inventory, like I said, is about 6.9% higher than this time last year, also suggesting more homes are kind of slowly re-entering the market. However, the spring listing season is just beginning. Historically, like new listings peak between 80,000 to 100 new homes in the late spring, early summer. So activity is expected to ramp up in the coming weeks. And then when it comes to kind of demand signals improving, so several leading indicators suggest that buyer activity could increase this spring. Mortgage application purchases are up, shown 8 straight weeks year over year growth, which is multiple weeks posting double digit increases. Pending home sales are also slightly higher than they were last year nationally. These indicators kind of predict a stronger existing home sales, 30 to 90 days later, meaning that the spring market may be modest improvements in transaction volume. So this is Houston related right here. As you can see, we did kind of peak up a little bit a couple weeks ago over what we saw in 2024 and 2025, I should say. But we are slightly down 8.1%, the same week as we were last year in 2025. As we're seeing in 2026. And this is just, national pending sales. As you can see, we are above where we were this time last year on pending sales. So it's looking like there's a little bit more transactions going on and people going under contract. But I'll keep you posted there. And then when it comes to national home sales slowly improving, like I said before, existing home sales rose slightly last month. Annualized sales 4.09 million homes. Month over month increase, that's going to be 1.7%. And year over year, we're actually seeing a negative 1.4%. And then while still below kind of normal levels, this may mark the beginning of a gradual recovery. Many analysts kind of expect sales to improve modestly throughout the year of 2026. As you can see, we're kind of drafting very similar to what we saw for the closings of 2025 as we're seeing in 2026. Slightly below a little bit on a lot of it, but it would be interesting to see what happens when we get into that spring market. And then some facts that I thought were interesting to share this week, then versus now. So in 1990, typical home costs about $96,000. Today it's around $418,000. So as you can see in the median home price back then versus now, that's a 331% increase in just, the early part of the 90s. Household incomes has grown too, but not nearly as fast as the home prices. So your median household income is going to be $31,000 and then $85,000 for the median household income now. That's a 174% increase. Buyer today need around about 10 years to kind of save for the down payment compared to just 3 years in 1990. And then because of affordability challenges, the average first-time home buyer is now around 40 years old compared to 30 years old in 1990. So very interesting. This kind of explains why many of the younger buyers are kind of waiting a little bit longer to buy and why demand builds up whenever rates do drop. And last thing I wanted to mention was going to be the interest rates for this week. So we did see a little bit of higher interest rates. So for the 30-year, we're seeing 6.41. I know last week we were at 6.25, and the week before that we did drop to 5.99. Mortgage rates briefly did drop, like I said, to below 6% earlier this month, but it's due to the global uncertainty pushing them back up higher, like we're seeing this week. Oil prices and geopolitical tensions have added a little bit of volatility to the financial markets, which is putting an upward pressure on the interest rates. So it'll be interesting to see what this does to active buyers in the market. Does it scare them off? But we're still kind of floating in that 6%. So it's what we've been kind of seeing for the last several months now. So nothing compared to what we saw back in 2023. But anyway, we'll keep you posted on everything from the the market and also the national stage. But any sort of niche market, let me know. Happy to kind of go a little bit deeper into your area or your neighborhood. But anyway, have a good rest of your week, and I will talk to you guys soon.